Hi, everyone. We're going to wait probably like 30 seconds or a minute here to get started just so that we have other people have the opportunity to hop on. Thanks for joining us. We'll get started in just a bit. Okay, looks like most of you are here, so I want to get started. I want to respect the time, especially at quarter end, having you guys on. I appreciate everyone coming on and still attending these. We are having them about monthly, but as always, please, if you want me to talk about a specific topic, feel free to suggest that in the chat or send something to support@rakedigital.com. I want to make sure that these are still useful for you all. So there is kind of a topic that I haven't really done in these webinars of the last couple of years. So I wanted to talk about that today, and then we will take some brief time to talk about quarter end since we are in the thick of it right now. Thanks again for attending. So topics today officially are bank reconciliation review. I have done webinars on subledger reconciliation. And that is on our YouTube if you want to go and watch those. I probably will talk about subledger reconciliation again in the future, but I think I did like 3 or 4 webinars in the past regarding subledger reconciliation. And then we will talk about some general reminders at quarter end, and then always leave time for Q&A at the end. If you guys have specific questions about the topics or just any general questions, feel free to put that in the chat or the Q&A section at any time during this webinar. The reminders at quarter end, the approach that I'm going to take today talking about it is that if I had an hour, a free hour at quarter end to prepare in Finlee or to check in on a few items, I would tell you what I would personally do in Finlee. So I thought that was an interesting way of going about that topic today, since I have done a lot of quarter end and year end reminders in the past. So I'm going to go ahead and go into Finlee now. And bank reconciliation, doing that, and I'm pretty sure that 99% of our customers are doing bank reconciliation on a daily basis, but there are some general reminders or themes of bank reconciliation that I thought it'd be useful to talk about. And I don't know that I've talked about that on the webinar before, but I'm sure one-on-one with training with most of you, I have mentioned all of these things, but I think they're good reminders of, one, how bank reconciliation should function, and two, how you can optimize bank reconciliation. So bank reconciliation is a great first step of reconciliation. We want it to go as quickly as possible, but you want it to be as effective as possible, meaning the information that you import into the system and how you resolve reconciliations and tie out ending bank balances directly impacts your balancing on subledger reconciliation. That is where subledger reconciliation gets its information. So making sure that you have a solid process on bank reconciliation will ultimately help you reduce your time or increase efficiency going through subledger reconciliation. So especially if you guys have a separate process of someone else is doing bank reconciliation and you're doing subledger reconciliation, making sure that that process on bank reconciliation is really solid and consistent will ultimately help you spend less time on reconciliation on a daily basis. So I'm going to talk about each of these sections here. The manage pre-processed transactions and manage positive pay, those are optional modules in bank reconciliation. Some of you have those, so some of you have those modules, some of you don't. I'm really not going to cover those topics today, but if you guys want more in-depth coverage on those and what those are, I'm absolutely willing to do that in the future, but I'm just going to go over the basic import files, import the manage exceptions, and then the reconcile tab here. The import of files, first, I just want to make a recommendation that if you all don't have a document internally on how you run your daily files or what files to run, I suggest that you take the time to create that documentation. Because each tenant is, customized, that you all are maybe on different payroll platforms, tax platforms, We don't have that type of documentation in Finlee, but it's really important that internally you guys have some type of document on how you run and what reports that you run in the system. And namely related to quarter end, it's really important that you make sure that you're considering the parameters of how you're running the reports, especially at quarter end. So for example, if you have a tax payment analysis, like for master tax, for some of you that are in master tax, and that's what you're running. It's called a deposit analysis, actually, in master tax. If that's what you're running to populate all of your tax payments into the system or some equivalent tax payment report, at quarter end, if your tax processing people are working over weekends, a lot of the times the created date of that tax payment is going to be on a weekend. So if you're used to running those created date, the parameters of the created dates for those tax payment files for like Friday on a Monday, but you're not covering the weekend, it's totally possible that you'll miss tax payments on that report if you're not considering the appropriate report parameters. So kind of just generally take the time to document what reports you run and then consider the report parameters, making sure that they're catching up your system to the reconciliation date that you're bringing it up to. We'll talk a little bit more about liabilities there towards the end, so I'll kind of wait to talk about that. When you go and import your reports on a daily basis and drag and drop them, all of those should be assigning to the appropriate file type here. If you don't have something assigning automatically, go ahead and let us know. I'm sure you're used to assigning that, but if we can find a resolution of how you name those files and to tie it to the appropriate file type, then that's just going to be one less thing that you have to worry about and tying it to the appropriate file type. So just kind of generally in the section I'm going over like what you can do to make things a little bit quicker, more efficient. So if you have something on your specific tenant that is not auto-assigning file type, just go ahead and let us know and we'll see if we can find a resolution. I think for some of you, maybe the name of the bank file isn't unique enough to give us information that we can use to populate that, but maybe we can talk about options there. So I do recommend you emailing support@rakedigital.com if you find yourself having to automatically or every single time assign file type to this. This would be a ledger transaction. And if one of those isn't tied or tied to the inappropriate one, like if it's not tied, then the import functionality won't be there. But if it's tied to the inappropriate file type, then it's not going to import properly or probably just flat out error there. So it is really important that those auto assign appropriately. Anything else regarding like reports that I want to talk about? Really the report parameters. I generally wanted to say, like, if you need to understand what reports are driving what type of data, I think there's an importance and like a correlation between how fast you're able to resolve subledger reconciliation items if you don't understand like what your reports are actually importing or doing. So if you have a question on, hey, I import this report, but I don't know why I import it, what is it actually doing? Maybe that's something to talk to other people at your organization about if you have multiple people doing reconciliation, or to reach out to us and talk through. Because if you don't know like what your reports are actually populating into Finlee, how are you able to effectively research when maybe you're missing a file, something goes wrong in bank reconciliation, or subledger reconciliation is really driven by these reports. So understanding them, what they pull into system, how they should be pulling is really vital to your reconciliation on a daily basis. So that's all I really wanted to say about importing files here. Manage exceptions. There's a few things about this screen that I always recommend to customers, and I'm sure probably one-on-one I've talked to you, most of you, about these recommendations, but I think it's a good time to do some reminders here. Our auto match, so when we run through the data to try to match the bank statement transactions to the outstanding ledger transactions, we try our best to find a reasonable match there, but we do have a conservative auto match because we want to make sure that 100% of what we're matching automatically is appropriate to match it against. So sometimes you will find, especially at quarter end, that there are transactions that come up as exceptions on managed exceptions. And then there are things that you can do, like expanding your auto match criteria, but I would do that knowing why you're expanding your auto match criteria. So what I mean specifically by that is that I know that some people go in and automatically expand auto match, expand it out really far, then kick that off and do that before they even look at their manage exceptions. And I just don't generally recommend doing that. I think that, you know, understanding why you're getting some of the exceptions maybe could lead to having a conversation with us or introducing another report that would help reduce the amount of exceptions that you come across. At quarter end, it's just pretty typical that you are going to have exceptions. I have an example up here, and the dates are a little funky here, but at quarter end, it's really common for transactions to clear early, way earlier than their due date. So a tax payment is going to be due at the end of this quarter, but it starts clearing really soon because maybe you're manually making payments online or remitting payments early there. I have these transactions, a set of tax payments that cleared on 3/15, but they have a due date of 3/31. I realize it should be April dates, just pretend that those are April dates. But if I look at one of these exceptions and then I see that, okay, there's a whole set of payments that have a due date on the ledger or transaction date on the ledger of 3/31, I'm going to then kick off auto match and match against that specific day, because I know there's a whole set of tax payments that there's a valid transaction on the ledger 2 weeks out. So rather than expanding my auto match by like 14 days forward and 14 days back, I'm going to pick a specific date to go ahead and try to match these against, because I know that it's reasonable for these tax payments that would clear typically at the end of the month, that are clearing early, to like auto match those against them. So I'd be a little bit more targeted with what I'm kicking auto match off and knowing why I'm doing that rather than just automatically expanding that. So I had a whole set of tax payments that were clearing early, so I went ahead and kicked off auto match again towards the end of the month there. And then there are a set of situations or tax payments that clear the bank account where out of your system, you guys are marking a check number to that, but maybe you're processing or creating a check where you make something online. I used to do that. Like I used to like physically print out tax checks and then put them on my desk to make sure that I made them at quarter end and then mark them as paid. So my system is saying, hey, you sent out a check because I created that check, but then I made it online and it's going to clear my account as EFT debit there. So there is going to be a set of payments where there's a check number on the ledger, but it's not clearing with the check number. Because there's a check number on the ledger transaction, that's a required criteria for that ledger transaction to match. So in auto matching, you do have the option to ignore check numbers, but I recommend using that sparingly and only when you have a set of checks left in your exceptions to run that through. So what I mean by that is that if I came in and I had a lot of exceptions and I just wanted to try to get rid of them, I expanded it out really far and then ignored check numbers without looking at what was left on the exceptions are just check numbers that actually cleared as an EFT debit with no corresponding check number in the bank. Like I introduce the ability to like match something inappropriately if I just really expand out that auto match there. There's kind of another course of action that you can take on that. If you know, and I know that that's kind of a crazy situation. You never send a check to IRS. I know you'd use EFTPS, but I chose to do that on my test data for some reason. But if there is a whole series of checks that you know that created on your tax account that you know that you made online and are not going to clear with that check number, you can preemptively go to the search ledger, isolate those transactions. So I'm going to go to my tax account, go where there's only check number, only outstanding transactions. And then let's say I had a lot of them and I knew that those were not going to clear as checks. Under bulk changes, I can go to the check number and remove all of those check numbers so that when that comes up in auto matching, it still isn't like it's not going to have that check number that requires a match on that ledger transaction. If that's pretty consistent too, like every single quarter, Pennsylvania locals come over with check numbers. I'm not sure if that's a valid situation, but come over with check numbers and you know that they clear EFT debit. We can do something in parsing to for that tax code to always drop those check numbers. But if it's kind of random, it changes every single quarter, then I would recommend using the methodology of going to the search ledger, using bulk changes to drop that check number so that when those ledger transactions come up, the check number is no longer on the ledger transaction and required in the match of the bank transactions versus ledger transactions. There, I did think I saw a chat. Okay, no, Kyle, thanks for providing the previous webinars there. I do recommend, I think I have like 2 years of doing this webinar now. So if you want to see if I've already done a topic, I've probably covered a lot of the topics already. I don't know if there's topics I haven't covered. So go ahead and check out our YouTube page there. I've given this suggestion before, but you guys will come across this a lot where there are tax payments that clear for different amounts in the bank account. And my recommendation is always to add a transaction for the difference rather than splitting. And there's a reason for that. And a few people internally have different suggestions too. So really you could do whatever method that you'd like, but let's say that I have this IRS payment that cleared for a different amount than I expected here. This cleared the bank account for 108 and I have a ledger transaction. I expected the tax payment to be 105.08, or that's what I processed at least through my system. So that's a difference. I know that it's related to that tax payment that's on the ledger, but it's a difference of $2.92. So you do have the option to split that transaction. So it's going to create a transaction on the left-hand side that corresponds to what's cleared the bank, but then leave a remaining amount of $298 outstanding on the ledger. When you split transactions, what you're saying is that I expect that that original tax payment to clear my bank in two separate amounts. So when you split a ledger transaction, you're saying, hey, I expect all of this activity to still occur. So I expect that additional $292 to actually come into my bank account. And we know that a tax agency is never going to do that type of correction or send money back to your bank account like that. So you kind of have to resolve that independent of the tax agency and what they're going to debit. So let's say that the IRS did actually debit $2.92 more. Maybe then you need to go back to the customer and collect an additional $292 because you're out dependent, like you collected 105.08 from the customer, you paid out 108, so you need to collect that additional amount from the customer. So if you do that kind of outside of ACH, you can leave this additional transaction outstanding there, anticipating that collection, but vast majority of the time you're going to do that through ACH, and that transaction is going to come over independently when you import that ACH file. So it's really generally my recommendation not to split tax payments that clear for separate amounts, but to add an additional transaction. So I'm going to select the original transaction that I know that it's related to, hit add transaction. It's going to populate the customer that it knows if it has that information, additional amounts to collect, kind of a weird way of phrasing that, but then I'm going to use the total is off by 292. I'm laughing because I'm like pointing to it, like you guys can see me pointing to it on my screen. You can use that total off by that red at the bottom to see the difference of the additional transaction that you need to create. So I need to create an additional ledger transaction of 292, creating that additional amount on the ledger to match those two transactions against what cleared. So that's my recommendation. If you do split the transactions, that's perfectly fine. If that 292 is not going to ever clear on the ledger, which in most situations, in my experience, it's not going to, you would just go to the ledger and then void that additional transaction that you split against. But I actually like maintaining the original transaction, how it came through on that ledger file import, and then adding a transaction for the difference. That's just my personal preference. People have different opinions about that. That's my personal preference though. On manage exceptions, just kind of generally not talking about the context of quarter end. I think it's important to kind of keep a pulse on what type of exceptions that you're getting. So if I have this exception here, and let's imagine that these weren't outstanding on the ledger, I think there's ledger transactions to match. They just cleared later than expected. That's why they're coming up as exceptions. But let's say that I have exceptions here that are wires into the account that I would have no corresponding ledger transaction for because it didn't occur in my system. None of the reports that I import on a daily basis would record that type of activity. It's perfectly fine to add those transactions. But if you're adding transactions where you would expect the activity to exist, you're either missing a ledger report or you're like running that report incorrectly, or you don't have a full understanding or full scope of the reports that you're importing into the system. Let me rephrase that a little bit because it sounds a little strange how I said that. I think that like understanding that the exceptions that you're getting on the screen, like there should be corresponding reports to normal activity. And let's say that this was an impound that was recorded on a customer, but you matched something previously. So this impound is now outstanding. So it's important to like realize that maybe I mismatched something, that I'm missing a file because I didn't expect this type of transaction to come up as an exception with no corresponding ledger transaction. And that kind of ties back to what I was saying about understanding the source files and what data is being pulled from what. So if I expected this transaction to come over on an ACH file and it's coming up as an exception, I need to understand if I'm missing an ACH file, if the ACH files aren't populating all the information that I expected, because usually if you have a theme of exceptions that you wouldn't expect to have and you're just simply adding them to the ledger, you may be either running a report incorrectly, which again will cause subledger reconciliation because there's a direct tie between the reports that you're importing, the data that you're inputting into the system, and then the subledger rec items that you're getting. Or you're missing reports, or there's an additional report that you should consider importing into the system. So understanding and kind of critically looking at the types of exceptions that you're getting. If you have like a big increase in exceptions that you're getting, that happens during quarter end, but let's say that you're not in quarter end and then you're getting all these new types of exceptions on bank reconciliation that you haven't gotten before. Maybe something operationally has changed. Let's say that you now allow customers to wire in a whole set of customers. I'm sure sometimes salespeople are like, hey, like they said they'll only come on to us if we now require wires, right? Well, that's gonna be outside of your normal process of sending ACH file collections, and those ACH files record all of the ledger transactions within Finlee. So maybe you guys have an EDI file now that you need to start importing into Finlee. The operations out of Service Bureau don't stay stagnant. So I think it's important to not assume that operationally everything is still the same, even if you're getting information to the contrary, right? Like if you're getting more exceptions than usual, if you're getting stuff on bank reconciliation that you didn't get before, bank reconciliation is going to be the first telltale sign that something operationally has changed. So that's when you'd probably try to backtrack where that should be coming from. Maybe you missed a file, import that file, then kick off auto matching again, then you'll be fine moving forward. But if there's a whole set of something that doesn't smell right to you and exceptions that are coming through, there's maybe something not right. I would trust your gut on that and either talk about it internally or talk about it with us, because operations change, how you remit tax payments change, things just naturally change operations wise at service bureaus. And I think the first line of defense is going to be bank reconciliation for that. I hope that makes sense, because I think it's important to understand that there's an evolution to operations there. And sometimes that improves things, right? That you get less exceptions. But if there's a new release in your tax processing engine, and then that causes issues because you're getting reporting from there, because that's how you're remitting files, you could see that within Finlee. And part of the check of a reconciliation software anyway should be showing you those changes over time as well. So that's really all I have to say about manage exceptions there. It's going to be a great indicator of, exceptions in subledger reconciliation. And if things are misappropriately handled in bank reconciliation, that is going to show up on subledger reconciliation, and it's going to be kind of relentless. So if you see a lot of subledger rec items that weren't typically there, go back to your bank reconciliation process, how you run those files, how you manage exceptions, and see if there can be some process improvement there, because that will help you out so much in trying to figure out what happened in subledger reconciliation. There can be a cause that's from or rooted from bank reconciliation. So I'll stop lecturing about that. So the Reconcile tab, I really didn't have too much to say about the Reconcile tab, other than it's important in my mind to always pull your bank closing balance from, oh, I hate that little thing there. I will eventually get rid of that. I think other customers have done that and suggested that before. I will eventually get rid of that link that takes you to the customer list, but it's on our scope of development there. So I think it's important to get your ending bank balance from your actual physical bank and never to get it from your bank file. The bank file that you run has the possibility of like you running it incorrectly, human error. In some PAI files and some CSV files, they do have running amounts that will give you the ending bank balance. But imagine you run that report incorrectly, then you're putting invalid information into the system. So it's always my recommendation to pull your ending bank balance from an independent report coming from your bank. And if you have it out of balance here for any reason, it is never valid to change the opening balance. Your opening balance, and some of you won't have access to change this. It depends on your user level there, but your opening balance should always be your previous reconciliations closed balance. This can cause a ledger reconciliation if you're trying to manipulate your opening or closing balance just to balance out. So your opening balance should never be changed. If you put your close balance there and it doesn't tie out to zero, a zero out of balance here, the first thing that I validate is one, that my opening balance ties back to my previous day ending bank balance, that I close that out on my previous day of bank reconciliation, that I close it out appropriately. I put the correct ending bank balance. And if those two things are true, then I validate the total by running an independent report out of your bank that the total cleared deposits matches the deposits that are recorded out of the bank, and then the cleared payments match the cleared payments, and that your bank closing is correct. Checking all of those should show you and give you a full investigation of why you're out of balance there. I've only had a handful of cases where it's true that a bank posts something where the closing balance of the previous day has officially changed. Like I've only had a few customers that I've worked with where there's like a trust account where they retroactively post a correction of like a check that cleared for incorrect amount. So let's say that a check cleared for 2 cents difference, and then 2 business days back, they go and post the difference of the 2 cents. Well, it's just not really a great practice of banks to do. I've only seen a handful that actually do that. I'm kind of critical of banks that would do that, in my opinion. But what you would do is I would post like the 2 cent difference in the current reconciliation to post to account for the difference, and then be in balance and reconcile. It's never valid to try to manipulate your opening or bank closing balances. The whole data that we base everything balancing off of is based on the fact that you've completed bank reconciliations through the day prior, and that actual bank balance ties back to the physical bank balance that you're holding of the last close date in the bank account. You do not want to ever manipulate that number. And you shouldn't ever manipulate that number. So I'm not saying that I've seen that a lot, but I have seen that before. So it's really important to put the accurate bank closing balance and to get that independently from your bank, just to ensure that you didn't have any type of reporting error. Because anytime that we can introduce human error, like running a report, if it doesn't run automatically, maybe you ran it for previous business day, but the previous business day was a bank holiday, so you're trying to import the same information again. Like there's a lot that can happen with how you run those reports. So kind of independently getting that ending bank balance is really important there. So that's kind of all of my advice on bank reconciliation. I hope that was a useful overview of that. And really quickly, I'll go over, so I know that it's quarter end and I've done recommendations at quarter end before. So there's definitely previous videos about that. If you want to go over my checklist of what I recommend doing at quarter end, and maybe I can talk about that really quickly if we still have time at the end. But if I was in your shoes and I was going to be doing a reconciliation for quarter end and I wanted to do kind of a quick check to make sure that everything was ready for quarter end, what I would spend my time doing is a couple of things. So your outstanding liabilities, and I haven't talked about this in a little bit, and I was kind of surprised because I was looking at my previous topics. Your outstanding liabilities is a balance that replaces itself on a daily basis, and that just corresponds to all your future responsibilities, right? And especially at quarter end, you start making quarterly payments and starts changing, right? Well, this balance changes on a daily basis by customer. But it's really important on a quarterly basis that you look at the source file of your liabilities and that you make sure that all outstanding liabilities are reasonable. So what I mean by that, and I don't have an example, like a generic example to pull up. So what I'd actually do when I got off this call, if I were you guys, if you just have a quick second to check this, because I haven't mentioned this in a while, open up the latest liability report, liability variance report that you imported, like your liability analysis from Master Tax. I solved its liability analysis report, I believe is the name of that. I can't think of the other applications and what the name of those liability reports are. Open your latest one and then see if there's really old outstanding liability there. So since we're processing for quarter one, you're still going to see outstanding liabilities from 1/1 forward, right? But if you have anything in 2024 still left over in your outstanding liabilities, I would question why that liability is still there. So let's say that there's a liability in 2024, a Q4 2024 for company ABC for $50 that you still haven't paid out. Our system is looking at a cumulative amount of the ledger to make sure that it matches the cumulative amount of your liability. So if you have an unpaid liability of 2024 and you're still holding that money, so you have $50 that, or this is a better example, $42 for FUTA that you're supposed to pay out Q4 of 2024. If you're still holding that on the ledger because you've never paid that out and that outstanding liability is still reporting from a liability analysis, then you know that the system doesn't know that that's super aged and that you haven't, that's not valid to pay it yet, because all we know is that the ledger balances to your outstanding liability. So I always make it a point, or I would make it a point on a quarterly basis to look at that liability report and to see if there's any really aged outstanding liabilities. Now, that doesn't mean that there aren't amendments that are pending for prior quarters there, but hopefully like your tax would have a quick reference of all outstanding amendments so that you don't like report, hey, why are all of these out here? But if you have an excessive amount or a whole agency that wasn't paid from Q4 that's still outstanding, I would actually just on a quarterly basis review the outstanding liability for a previous quarter. There is a way, if you guys are balancing by quarter or have quarters tied to your ledger transactions, you can run like customer balance reports by quarter there to see if there's any previous quarter that's out of balance, because technically within a whole quarter, even including the payments that are made like this month for the prior quarter, once this close of the month is done, technically, if you are assigning appropriately all ledger transactions to appropriate quarter, that overall quarter on the ledger should be zero, because all ledger transactions or all impounds should correspond to all payments, including quarterlies that were made out at that time. So it's good to consider if you don't have quarterlies or quarters tied to your transactions to try to have that done, or you can do bulk updates to start updating that. And that will prevent against really old stuff that has not been paid out. But I do recommend reviewing that on a quarterly basis. I've said this before, but I think it's important too, because just as a reminder, we do not report checks as aged uncleared items because they can take a long time to clear. So for me, I would make it a regular practice to look at your tax account and look at all the outstanding checks as of the prior quarter. So if I go and I say everything due through the end of January, because that's the date that most of those checks for quarter four would have had on the check, I'm going to look at every check that's outstanding for that period of time and then send that over to tax. Or if you are taxed, then start reaching out to those agencies because it's been 3 months since you've sent that check, but they haven't cleared it. And most checks become invalid after a 90-day period anyways. So it's important to either send out a new check or communicate with that agency on uncleared transactions there. So I would review your liability analysis report. There was one other thing that I wanted to tell you guys to do, and it's I did not write it down, and it's leaving me right now. And the one last thing, and maybe the other thing will come back to me. The Kanban board, I made the suggestion a couple months ago. If you do not have due dates on everything that's technically open, I would go and just take some time this quarter end to put due dates on things, because especially if you have a lot of outstanding items, maybe you wait till quarter end or the end of quarter end to do all of your refunds, right? So over the quarter, you can have accumulation of items here. I believe personally that every single Kanban board card should have a due date, and that you should adhere to looking at that card again on that due date. So it's really important to not lose track of variances, even if you know that they're going to take a while to clear. The most efficient way to manage that is to utilize due dates on those so that you know when you want to go back to those items. So just make sure that your Kanban board is up to date. And as I said, I believe last time, adding all subledger reconciliation items on a daily basis, regardless if you get to all those items or not, is always the best practice, because then you'll see the instance of when those items were first reported there. Because subledger reconciliation is only showing you all outstanding variances that are not yet added to the Kanban board. So some people ask, oh, well, when did this first come up? If you're not adding it on a daily basis, then you're not able to track, when that variance first came up in the system. The only way that you could is if you added and cleared the subledger reconciliation on a daily basis there. So that's really all the suggestions that I had, and that's what I would take the time to do if you have not done that. I think that organization, for organization purposes and keeping track of all variances and making sure that you're getting as accurate of reporting of variances as possible, that's what I would take time to do. I'm talking too much this morning. That's what I would take time to do. And yeah, if you have any questions, feel free to put those in the chat now, because we have a little bit of time there. I hope that you got something from today's webinar. I appreciate everyone attending. We will hang around for a few minutes. If anyone has questions, feel free to put that in the chat. And if you have any topic suggestions, I want to make sure that these are still useful for you all. I appreciate a lot of you still attend these after attending them for a long time. So I want to make sure that the topics are still useful for you all and that we're targeting what specifically you have questions on. So we have to be a little general because a lot of people are on a lot of different payroll softwares, but it should be the same experience using Finlee, and kind of these concepts do apply to everyone. So we're always open to suggestions on these though. So thanks so much for attending. We'll hang around for a few minutes here. Thanks, everyone. Appreciate it. All right, Autumn says, on the liability variance report, when I customize the variance threshold to $1, why can't we group it by tax code? You can group by tax code if you do the group by tax code of the $1. It may be unselecting, but let me share my screen. I'll do that really quickly. I don't think I have this one configured, but if I have $1 here and then run it, I can group by tax code and then get any variances of any individual taxes that exceed $1. So like when you're grouping by tax code there, and I don't know specifically if your guys' tenant is set up to report by tax code. I don't think that it is. But you'll see, like, if you're not balancing by tax code, specifically your impounds, which I don't think you guys are doing. So, because you guys may not have the reporting to do that. Like, there's going to be an overall variance of 0. That's why they wouldn't have initially reported when you're not grouping that. But by the individual tax level, there's a difference there. So not every single tenant is set up to accurately report by tax code, because most of the time you have to be able to do that, you have to get a report that allocates your impounds per tax code. So this may not work for your tenant if you're not putting the correct information in to get the impounds allocated by tax code. So it may not be applicable to everyone, but it does absolutely work with that threshold. It's just that your tenant specifically may not have reporting to run that accurately. Yeah. Yeah. So you can see it by tax code, but it shows all clients. Yeah, because if you look in the details of it, so like if you see $0 here, right? That overall variance wouldn't come up if I wasn't grouping by tax code for $1, because I know that the overall variance is 0. But if you specifically, and I'm almost positive, Autumn, that your tenant doesn't actually, like, we don't report to you by tax code, because it's only for tenants that you allocate out the impounds per tax code. So on the ledger, like if I group by tax code for this customer specifically, 1002 here, I don't have the impounds totaling $34,000 allocated out to all of those tax codes. So it's never going to balance by tax code. So that's why that option would never be turned on your tenant, because you don't have the information to allocate the impounds out. So specifically for your tenant, I wouldn't recommend running it by tax code because you just don't have that information there, but it is running accurately because it's saying, hey, at the threshold of any tax code that has more than $1 variance there, but the overall customer is a 0 variance. So there's some tenants that can successfully balance by tax code, but that's if your reporting allows for that. And I'm pretty sure that your tenant doesn't have that. Let me just look right here. It doesn't, because you don't have accurate reporting. Like, I'm pretty sure that from your guys' impounds on your ACH file, it just gives you a total amount. So like if I could break down of what that collection was per impound on a corresponding report, then I could balance by tax code, but not every tenant can, and your guys' isn't. So I don't recommend running it per tax code there. It gives you information of like everything that's cleared that tax code, but you have to have reporting to allocate impounds out. So it does run accurately based on what you're asking it to do. I'm saying, hey, by tax code, any variance that exceeds $1, show me that. But that doesn't mean that the overall variance isn't 0. I hope that I'm explaining that correctly. So for your tenant specifically, I don't recommend running group by tax code and just running it without that grouping, because you do not balance by tax code on your tenant. It's only for ones that do. So it's not technically reporting incorrectly. It's because on your overall ledger, you don't have impounds allocated per tax code. I hope that answers that. Any other questions? All right, we'll hang around just in case there are, if someone's typing in the chat, but otherwise, thanks everyone for your time. All right, thanks very much, guys.
Jumping off. Thanks, Erin.
Thanks. Bye.